Well, we've been talking a lot about Canada's record population growth. Sometimes we don't talk as much actually about one of the key reasons for that growth. It is in part meant to offset the fact that many Canadians are moving beyond retirement age. Data from Stats Canada projecting the share of people in this country over the age of 65 may get closer to, call it 30% by the year 2068. And if you consider what those numbers looked like in 2021, it was roughly 18.5%. Those are some pretty standout numbers. It raises a lot of questions within our healthcare sector, of course, or the healthcare area, but it also raises questions around housing. Sienna Senior Living operates retirement residences and long-term care homes across the country. Nitin Jain is the CEO. He joins us here in studio. It's nice to see you.
Nice to see you as well, John.
I mean, I guess in the world of investing, people are looking at all sorts of themes right now. You know, they look at AI, they look at electric vehicles. But an aging population is something that you guys, I mean, it's literally your business. Right. How do you think about those numbers?
You know, our demographics, you mentioned 65. The demographics we serve is 85 plus. And that demographic is one of the fastest growing demographics in Canada at the moment. And now we also have a supply challenge because of interest rates and construction costs. We're not building as many senior homes as we were in the past. And the recent survey, so long-term care homes, which is 50% of our business, are all full. They have long waiting list. And retirement homes now are projected to be occupied around 96, 97% in a couple of years because of both those things, the tailwinds of both the demographics and the headwinds of lower construction.
And so 85, I mean, it feels, without looking at the numbers, it feels like people are living longer lives. It's great. It's the modern world that we live in. But then you have these other questions, which is, well, what am I going to be doing in those later years?
And that is so, you know, that is a very important part because a lot of people look at senior housing as a place for people to stay. That's exactly another reason people can stay in their homes. There are many reasons why people come, especially retirement homes, because they're looking for the social impact, they're looking for the right dining opportunities, they're looking for living their best life. And that's why our purpose, cultivating happiness in daily life, is so important. And the same applies to long-term care. A lot of times we take an approach that it's about health. Yes, it is about health, but it's also about happiness in those long-term care homes and retirement homes, which is a big focus for us.
Yeah, and you have different properties.
Correct.
But, you know, let's say in the world of investing, everybody is reminded, make sure that you figure out a plan for your retirement with your investments. I wonder if as many people think about where they're actually going to be living, because I guess sometimes people are planning and they transition into one of the facilities that you might operate. Unfortunately, sometimes people, as you get older, sometimes you have health issues, and then you have to find an alternative. So is in terms of the people who are coming and staying at your different facilities, is it sort of a marriage of those two themes?
And that's, you know, so we have a full spectrum from independent supported living. Someone is coming there because they're looking for someone to cook for them, have the right social programs, and being able to go out in a safe and in the right manner. Yeah. All the way to long-term care, which is very health-driven. People are coming there with significant medical challenges, and they really need 24/7 care. So we provide the full spectrum, and the age group is actually similar for both of them.
So, and you're saying that in terms of your available supply, it's somewhat tight. I mean, we have this conversation around demand and supply in the broader housing market. How would you characterize what kind of occupancy levels you've got?
So starting with long-term care, all long-term care homes are full. They have a huge waiting list. We have 80,000 beds in Ontario, 45,000 people roughly on a wait list. In retirement, we are around 88, 89%. We are industry leading in terms of as it comes to occupancy from the 5 publicly reported numbers. And the industry average is projected to be 94, 95% by 2026.
And then you mentioned the supply part of it, the challenge on construction. You know, the new wrinkle, I suppose, is interest rates.
Of course.
I mean, as a business operator, are you working on new projects right now? Are there headwinds to getting those new projects built?
Building is hard. We are still building. We have around $300 million in development. We built a brand new retirement home in Niagara Falls. If you're in that region, stop by. It is a beautiful home. And we have 2 massive developments in Brantford and North Bay. One is a campus, and one is just pure long-term care. We have other projects in pipeline. And I think interest rates, what Swiss National Bank did, I mean, that's only one signal, but it's a positive signal.
Yeah.
And then, you know, in long-term care, we're also reliant on government funding. Government has worked hard, but we're not building as many as I think both government and sector would like to build. So our way to make that funding better with lower interest rates will definitely put more shovels in ground.
For those who don't know, the Swiss National Bank decided to cut interest rates. We're wondering when other countries are going to cut interest rates,
yes,
including this one as well. Talk to us a little bit about the evolution of the business since the pandemic, which was such a complicated time for everyone, but certainly for you as well. And you navigated through that. You've talked with us about that in the past. When we look at the stock market performance for Sienna, for example, obviously investors, in a lot of ways, they decided they would ask questions later. At that time, there was some pressure on your stock price. Now, we have seen quite a recovery in it, but we're not quite back, at least in terms of the performance of the stock, where it was before that 2020 reality check. So what's been a priority for you just in talking to your different investor stakeholders?
Yeah, so we've been now talking since Q1 of last year saying that stability is back and we are now going to grow on that stability, and no one believed us in Q1. Then we had 4 quarters of not only going back to previous stability, but now building on top of it. And now we finally started to see analysts saying, okay, well, the company has now stabilized, our homes are full, staffing agencies for all intents and purposes are back to 2019 levels. We have a very engaged workforce, and we have the demographics on our side. So we truly feel the stability is back in senior living, especially it relates to long-term care and for retirement. We have 88% occupancy, and we're looking to grow even that. So we think this is going to be a tremendous sector to be invested in. And we find more and more incoming phone calls from either the retail investors and institutional investors who did not pay as much focus on this sector for the last 4 years because of the challenges of pandemic. But we are hearing more from those investors who were probably sitting on the sideline.